Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, October 7th. Great to be with you guys this morning. Rohan, Steve, the whole room, great to be with you to wrap up this week. Things are getting slow. So we started off the week with some nice moves. Last week was insane. We have a couple of OR opening ranges still, in play on Aussie, on Sterling. But we are just wrapping up the first full week of the month, and we do have non-farm payrolls on tap yesterday. So on the menu for today, we're going to review DXY, Sterling, Dollar Yen, Gold, Dollar CAD, SPX, Bitcoin. We'll take a quick look at the 10-year, which continues to hold resistance. Euro, Kiwi, oil, and we'll wrap it up with Aussie. I do got to be mindful of time today, guys. I'm on a time crunch, so I'm going to try to get through these as efficiently as possible. First things first, this was the DXY on the Sunday open. And we came into the start of the month saying we hit big resistance in DXY. That's right here on the weekly chart, 94.47, 94.65 is the range that we noted. The last 2 weeks have been capped by that advance. That's right here, okay? So we came into the week starting saying, whoa, we made a nice launch here. There's a possibility for some pullback. In fact, likelihood that you'll get some pullback. First level of interest was right here at 94, 93, 99. If we broke lower, we said watch that August high, 93.72. That might be a nice launching point. Well, fast forward a couple of days, and here is DXY now. Okay, perfect tag. Drove down a little bit deeper on an intra-candle, intra-hour type of basis, held. Here's the breakout of the descending channel right back at 94.26, failed right ahead of that key resistance range again. So on whole, this is a clear break of the weekly opening range right here. It suggests to look for a Thursday, Friday high. We failed, but the pullback is still holding this range. So the levels are unchanged, guys. In fact, a new 618 of this rally right here highlights the same level we've been highlighting at 94, 93, 97 and extends into. So even if we were to dribble down here, guys, that's support, that's still key resistance. So this is where, by my part, I'm kind of on the sidelines here, right? I want a more stringent reaction, right? I either want to get the short and a play off here, or if we get the drop and a hold, sort of a launching point here might be a nice finisher off that last swing higher. Remember, on whole, we are at uptrend resistance. Here's DXY, the daily chart. No change, big resistance, monthly opening range taking shape right below resistance. These are our best plays. So if you haven't gotten any positions on DXY, if you feel like you've missed out on the move this week, don't worry, don't get FOMO. We're still in the very early stages of the monthly opening range. Rohan saying very choppy price action. I agree with you, Rohan. I'm right there with you, man. I haven't taken anything actually over the last 2 days. Looking for some clarity here. There are some nice moves, but for me, and I always give you guys this warning, start of the month, start of the quarter more specifically, I tend to be real light. Call it trigger shy, call it, over analysis, whatever you want to do. I'm just light in the month, light in the quarter. And then we start to sort of double down as we get deeper into these trends. So for the DXY, look, for NFPs tomorrow, you're still in the uptrend. You're below key resistance. So it's either going to be a break and close below 94. That'll be the onset of a larger correction. Or, again, if we break this high, guys, you're looking at 95.06. You're looking for the 2019 low day close. That's 95.55. But this is a big, big resistance. So that's all to say, guys. The dollar uptrend is intact, but it is still at major resistance. So the close would need to be above 94.65 to validate the resumptive move. Heading into tomorrow's non-farm payroll report, we are expecting to see a print of 500,000. Remember, last month we got that dismal read of just 235. Unemployment rate is expected to fall to 5.1% from 5.2. So major event risk on tap, near the highs, just below resistance, but still in the uptrend. Questions on dollar index. So, that's all to say, like it higher, but we're at resistance. So we need to clear that 94.65 level. If tomorrow, and I like to give you these if and statements, I'm not like the guy who likes to speculate a lot, but from a trading standpoint, the if and statement is if NFPs charge a rally into this region, I'd actually be looking for a possible fade opportunity. Okay. If tomorrow charges, the initial reaction is a break, I still think you're looking lower, but at that point, you look for the recovery back towards former slope resistance as support for the entry for the pullback lower. We're at a major inflection point. We're at major resistance. We're looking for inflection here tomorrow. Questions on DXY? Take a segue here. We usually cover Euro right after this, but I do want to go in order of what we covered this week. So I'm going to hit Sterling real quick because this was one that we also were warning for the recovery. So we came off of downtrend support. We were looking for the rally. If the rally is, or if it was just a corrective bounce and the broader trade was lower, it should be capped. Let me show you Sterling real quick on the weekly chart. So recall last week we came off of median line support, closed well above that 2017 high we closed that we've been watching as a major pivot. And the weekly chart doesn't really tell you much, right? You're right in the middle of last week's range. That's not really a very good tell. What I do want to highlight on this chart is resistance at 37. That's the 52-week moving average, a very nice pivot in price over the last 5 years. Also, downslope resistance. So you got resistance, you know where support is. What does the near-term chart say? Well, here's the daily. Former slope support or former consolidation, right? That triangle we were looking at for a while. Former support turned resistance. If this is moving lower, that's exactly where you'd want to see the rally fail. The whole focus for me into Sterling, by the way, how do I say this in a way that makes sense? If dollar is going to come off, I think this is one of the better ones to play possible dollar weakness. You got that pivot, you came right back above this major pivot zone that we were watching, right? 2018 open, 2017 high day close, major pivots. You got the highs here from 2019, you got the pivot high from last year. Obviously this year, or December, we broke above, January checked it as support. That break and recovery, was that a false break scenario? I always tell you guys, Sterling is a notoriously professionally traded market. You get the throwovers. Again, don't take my word for anything. You get the throwovers of resistance often. You get the false breaks of support often. Is this one of those? It'll all be determined by what we do at the yearly open. Resistance at 136.46. That's the objective yearly open. The July low day close extends that into 36.25. But that's really the key resistance region we're watching. Here's what it looks like on the intraday chart as comparison to earlier in the week. So right into the Sunday open, you know, our concern that you might see a larger recovery actually played out pretty well. You didn't get much of a pullback to get entry, right? We didn't get the entry, but it did run right into resistance. And for Sterling, the weekly opening range is preserved. So you have that also appearing on Aussie this week. You got a false break of the lows, but that's all to say that we have a very clear opening range for the week, which is intact heading into Friday. So if you topside pop above 36.46, you're looking for 37.21. That's the first target. If you break the weekly opening range lows, I wouldn't necessarily be interested in playing the short side until we clear this pivot zone again, and that's the 35 handle. So again, the levels, the Momo, you know, momentum we lacking. Levels are clear, but just lack of conviction on directional bias here near term. So Sterling, another one where we'll wait and see. No data on tap for the end of the week. So again, watch dollar price action here to move things around as we head into non-farm payrolls tomorrow. Watch that break at the objective weekly opening range. That's number 2. Number 3 is dollar yen. So what a trade. Amazing, amazing moves. Let me take you to the weekly chart first. And here's what it looked like on our last update. We'll come back to that in a moment. So we talked about this at length. Big resistance, 111.60, 111.98 has been catching the highs for the last couple of years. We drove into it last week and pulled back. And our whole premise this week is this an exhaustion? Should we see the pullback off that level? Well, into the start of the week, you saw a little bit of a dribble, but we went right back up, still holding resistance. So I want you to take a look at this, excuse me, guys, heading into the close of the week. Why? Because look at the 10-year. Yep, wrong chart. Here's the 10-year, guys, on the daily chart. We're at resistance. We've been at resistance since last week. What is that resistance level? Hold on one sec. You got the basic trend line resistance off the high. You have the 618 retracement of the entire decline from the March highs. You have uptrend resistance, and it's all right here. If we see a pop higher, that's going to be beneficial for the dollar, obviously. That's going to be beneficial, in my opinion, for dollar yen. But until we do, you got 10-year at resistance. You got dollar yen at resistance. So here's what the scalp looked like. You know, it wasn't the cleanest setup. We kind of dribbled out of this. This slope is really, I wouldn't pay much attention to it at this point. Just connecting the highs from last week and this week, a parallel seems to be connecting the lows, looking for a reaction here. At the end of the day, dollar yen, I'm no interest in trading this, either a pop above 112 or a clear break of the weekly opening range lows, taking that key support that we were looking at near 110.25, 110.40. I don't have anything for me on tap here. It does look like 5 waves up on a real granular level, but nothing that I could say is a conviction trade here to try to push this. Does that make sense, guys? All right, so moving right along. Not really much to do on here. Just watch the weekly close as it pertains to yields and dollar yen right below resistance here. So I don't want to spend much time on this. Gold is the next biggest play. This chart's messy. I'm going to warn you. I know there's a lot going on here, but I want to kind of give you a picture of what I think may be underway. So for gold on the weekly chart, it's a non-consequential range that we're in right now, but the key level of support that we've been watching for the last like 5 months remains, and that level is 1738, 1747, 618 of the rally, and former swing highs from back here last year. We haven't closed below that. Now, on the intraday chart, or on the daily, let me take you back to the daily first. Here's what it looks like, and this is what I showed you guys last week, excuse me. And here's what it looked like into the start of the week. I'll show that in a moment. But the downtrend, again, the level at which we were looking for support, 1728, 1738. We got that drill down lower. Jay, you're in the room. You're the one who pointed out that 1618 for us. We caught the low. Here's the vault. Now, it looks, and it's very precarious, but it looks like a break above support. And on the last 3 days, the lows have sort of been riding that gradient. I don't know. That's not a conviction breakout, guys. It looks like it still could hold, but you want to see acceleration. You don't want to see a pivot or a break above resistance or support meander like this. You want to see a break and a pop, a breakdown and a drop. So what's this? Here's the intraday. So I know there's a lot of lines going on here. This line right here, I'll delete it real quick, is the larger slope. We're just going to delete that and keep this. Here's the broader formation we were in for the entire decline. The breakout last week, is this the slope? If it is, it suggests that even if we break lower this week, 1738 is still the level to hold. I'm of the mindset that, yeah, this is going to be a more significant near-term low. That's just my humble opinion, right? But for that to manifest, I need a pullback to find support somewhere along this gradient, somewhere ahead of 1738, okay? The break at the top side, you look for 1777. That's a soft target. The real big Bahama Mama is 1795, 1791. That's the 618 that dropped, the 2012 high, and just a nice pivot in price. So still another one where on the commodity block, we're kind of still in a wait and see approach. The weekly range is still holding. You don't really have anything to talk about here yet. So we wait for clarity on gold. Okay, we wait for clarity on gold. Questions? All right, number 5, here is dollar CAD. OR is still intact, the weekly opening range. Here's what dollar CAD looked like as we started off, or this was yesterday's update. Weekly opening range is preserved. I talked to you guys about the multi-week consolidation. Well, let me go back to the daily first. The multi-week consolidation that we're in for dollar CAD, right? Higher low, higher low, higher low, lower high, lower high. We're in it. Okay. We talked about this slope, key support, bullish inval. And since the start of the week, I've been looking for a low off that, or if we get a dollar sell-off tomorrow and we drop, guys, this is a key region for dollar CAD. If this is two equal legs off the high, that's 24.40. 50% of the rally off the low, the highs they made back here in June, right there as well, 100-day moving average. So both levels of interest, if we fade into it, to possibly look for an exhaustion low. To get constructive, if it wasn't early in the month, I would say 27.13, that's the breakout. But because the monthly opening range high is just higher, I'd want to see that 27.40 to get the resumptive move, or at least a test of the upper parallels, the high day close for the year. But as it stands right now, man, I'm not interested in taking the short side of dollar CAD. Okay, even if it drops, I'm looking for possible exhaustion here. But we are at consolidation support for the last 3 days. Here's what it looks like on the intraday. Okay. Possible areas tomorrow, if NFP's charges a dollar weakness story, breakout, that's the yearly open that we would need to validate the move higher. So yet another one where the objective weekly opening range is perfectly preserved into Thursday. Look for a breakout of this range for guidance in dollar CAD. Just to remind you where we are, dollar CAD on the weekly chart looks like this. I mean, we're at, we broke that support on the weekly chart with that close last week, didn't close below. We traded well below, but we didn't close below. So that's all to say, guys, that this week, for some reason, if dollar makes a pretty big run and closes the week above this slope, it'll look like it never even broke. So again, just to show you, you know, that's all to say. If the break happens, it should be a pretty significant break, which is one of the better trades to look for as you get into those exhaustion moves. Can we look at crude oil? Absolutely. It's on the list. I got you. Just let me get through these first, okay, Ron? So SPX is number 6. Here's what the S&P looks like, or here's what it looked like last night. This is such a clean trade. The pull into support was our focus. Into the start of the week, we were talking about this weekly chart and whether we were going to get the move lower or not. Here's SPX on the weekly. By the part of the weekly chart, we haven't broken any uptrend support yet. Here's the attempt. Here's last week's close. We closed right above that slope. Again, don't take my word for it. Here's what it looks like on a line chart. So the break we saw last week was a break on the daily chart, but on the monthly or on the weekly chart, we haven't quite broken uptrend yet. Here's what it looks like on the daily. Right? Basic trend support, broke, tested as resistance, made a new low, and then we got this consolidation here. And this is what I was talking to you guys about on Monday and Tuesday for that matter. If we are going to head higher, or if we are in for a rebound, you're still not out of the woods until you clean 444. Or I should say 44.44. That's the 618 drop. You got the high day close, that reversal close that you made there just below. So 44.42, 44.44. That's near-term bearish inval. So even if this little breakout is going to run, that's the level you would really need to clear to mark resumption, right, of the broader uptrend. As I told you early in the week, my favorite scenario into the start of this week was that last washout to get a clip with 100% extension. Still might get it, but on this break, you have to respect the near-term move. And that suggests we're in for a larger rally near term towards 44.44. Questions? I don't want to say about MA, but there is a 50 around 44.44. Which one is it? It's a 50 moving average? Jay, never be coy, bro. We're all looking for the same stuff. Let's take a look. Loving it. Loving it. Yeah, absolutely. And in fact, if you take a look at 50-day moving average, it's not one that I use as often. On the dailies, I pretty much stick on average the 100, 200, right? On the weekly, I love working with the 52-week or yearly moving averages tend to be pretty significant. But if you look at these two moving averages in and of itself, this is obviously the 100. This is the 50 that Jay just pointed out. You've been getting some probes, deep probes, but they've all been really short-lived. Here's the pivot. Yeah, absolutely. Pour some sugar on that one, Jay. Love it. All right. That is SPX. Here's a quick segue into another one that we covered on that update. I went over with you guys the 10-year yield. So you guys seen that same resistance is holding, no change there. Here's Bitcoin. And the breakout that we had highlighted a couple of days back near trend support popped higher. And that pop pretty much was the end of that test of uptrend support. So last night I gave you this update. The main level that we're looking at on the upside here, excuse me, is 57,128. That's the 786. We haven't made it there yet. Here's what it looks like now. And again, here's what it looked like last night. Here's the daily chart. A little bit of an exhaustion there. In near-term support, 52,956. I want to say constructive above 51,030. That's the real big resistance zone. Here's what it looks like on the intraday chart. So nothing really to worry about too much here yet. You've seen a little bit of a kickback. Here's what it looked like last night. Whoops. So even if this pulls back into that parallel, I'd want to see it hold at 51,030 if this is heading higher. Top side levels 57,128, and if it breaks there, man, it's probably gonna be another accelerated run. Now I've been getting a lot of questions. High caught by the May high day closed on Bitcoin, or are you talking still about? Yes, you could definitely find that level. It's a level. Let me say this, Jay. Well done again. You're doing great, by the way. It's a level. The only thing I tend to just warn a cautionary note is your high day close, your low day close tend to be a lot more significant when they're registering major highs in price. So I would put more inclination or more emphasis on this high day close for the year, right? On this low day close, right? Even if it's not the low for the year, but it's a multi-month low day close. This high day close, it wasn't really a record high. It wasn't major inflection. So it could offer a little price inflection here near term, but I wouldn't put too much emphasis as it like possibly holding the highs. You know what I mean? Sorry, I'm looking on normal chart, not log scale. It'll be about the same. I mean, a little bit of a difference. But when you're talking about those kinds of levels, high day close, low day close, they shouldn't be too far off, Jay. So could get some kickback. Again, I want to see support ahead of 5130. Interestingly enough, I got a lot of questions on this yesterday. I actually published this on Daily Effects, and someone was saying, Mike, why are you using that slope even though it broke the bottom end? Well, guys, we have to pay attention even when the slope breaks on what happens. And if you look at this gradient, support, break, instant resistance, break, instant support, 25% parallel, resistance, breakout, on the reversal, instant support. So the slope, the gradient has merit. And I'm going to continue to watch this one. So on the upside, like I said, 57,128, that's your first like major inflection level. Beyond that, you're basically looking for a resumptive trade to fresh highs in Bitcoin. So it's going to continue to make headlines. There's a lot of people talking about this, whether it's the fact that, you know, the SEC has essentially said they're not going to, you know, ban this. You've seen either also central bank commentary coming back. They're not going to be looking to sort of strike this off the charts. But then the other side, you've got all these conflicting markets and economies like China that are actually cracking down. So the headline risk, guys, with any altcoin or any of the cryptos is going to be there. It's something you can't get around. whether it's Ethereum. I know that's another one I've been tracking very closely here, also checking the 618 of its recent decline. But if you're getting involved with these cryptos, currencies at this point, they are pretty close, okay, to some major breakouts. And with all the sentiment that's running around them, you want to be very, very cautious. All right, so that is Bitcoin. Okay, last four here. Going backwards, gonna go back to the euro dollar and tell you where this is thing. I haven't been involved in this one all week. This is typically my favorite go-to, aside from Aussie, but this week, man, we highlighted this level on the weekly chart. And like I always tell you guys, if the weekly chart doesn't really do it for me, I'm usually not even involved. It all starts with that multi-time frame approach, that we have clarity on all time scales, right? On all magnitudes of trend, degrees of trend. So watch the close this week. 1569 was the level that we noted. That's a 2019 high, okay? Big support zone in general. I want to see a daily close below this if the drop is going to hold. If we close back above, that's the quintessential exhaustion trade. And I'd be looking for a little bit of a euro rally, a little bit of a dollar pullback. So if you're not holding anything, that's sort of the influence on this one moving into the close of the week. Watch the weekly close. Now on the daily charts, it's not actually that messy. This slope that we've been following off the highs from July and last month, still holding pretty well. Median line break to the close of September, median line resistance into the open of October. So for this one, I haven't dropped my monthly marker yet. Let me just do that for you real quick. For this one, the monthly opening range remains intact. So I don't want to force a move here until I get something decent. Here's your monthly open. You set a monthly high, you set a monthly low. You're pretty much close to the monthly open again. We opened at 1575. We're at 1570 or 1555, excuse me. So that's all to say, what do you want to do with this, guys? You have divergence into the low, price action with a lower low, the oscillator with a higher low. Both reference points below 30 tend to be a weak signal, but waning momentum nonetheless. This was a major pivot in price. We didn't see the buckle and acceleration that we saw, so I'm a little hesitant. All things held constant, you're looking for the drive into 15. I can't take a new position from that, though, from here. So if you're holding shorts, that's really your main sort of level of interest, okay? You've got so much up there. It's the 2019 high day close, but you also have the spike highs from last year, the break and accelerated breach in July, the 50% retracement, and slope support. So that's the major support for the euro downside. What does it look like on the scalpel? Here's what it looks like. Again, you could interpret this as an opening range break. It was way too early. It was into the open of Tuesday, essentially. So not something I'm, a habit of doing. But if this is heading lower, rallies should be capped by 116. Your next key support level is 115. So, on a new positioning from here, you're not near the highs. You're not near the lows. Unfortunately, another wait and see approach. And that's okay, guys. If you're kicking yourself because you got FOMO or you haven't been able to take on a position this week, don't. We had a great week last week. Markets aren't going to continue to churn with absolute clarity. We had a whole bunch of stuff. One quick note on this debt limit, guys. I've been interviewed this week by Business Insider, Barron's. Yesterday was Yahoo Finance, and they're all asking about the debt ceiling. My typical answer, it's not a starter. We go through this we did this before, push and pull. This time is a little different because of not only the geopolitical, I would say geopolitical, but just the domestic political atmosphere that we're in, and because there actually is a chance that they're going to default, which is radical, right? I don't think anyone, every time we come against these debt limits, I don't think anyone really believes that the U.S. will default. This week, markets start to consider the actual possibility of that. And I think that's what caused the massive volatility that you've seen. Now, that's all to say that we're starting to get little negotiations and it looks like it will be averted. But I just want to keep that in the forefront, guys. The deadline, I think, is the 16th of October, if I'm not mistaken. If there isn't a delay or a shift, a raising, or at least an extension on the debt ceiling, the technicals are going to go out the window and things could get pretty disorderly very fast. I'm not trying to do scare tactics. I'm not trying to, fear mongering. I'm just giving you that warning because, again, the debt ceiling is typically a non-starter. But this time, obviously, you've seen the markets really start to get a little bit more concerned. I do believe that they will come up with something. I think the markets are taking that in stride, but just a risk that you want to watch over the next couple of days. RBNZ was this week. We didn't get much. They actually raised rates, but it was a dovish hike. It's funny. I was laughing with some guys around the city yesterday. We were talking, some trader friend of mine, and I laughed when he told me that it was a dovish a hike. So what? Every time they hold, it's a hawkish hold. Talking out of both sides of our mouth here. But that's all to say is that you still couldn't get much of a move. And the weekly opening range is preserved just below 38.2 retracement, which is basic resistance on this one. It's not something I'm super interested in. Here's what it looks like on the daily. Again, another one where the monthly opening range is preserved right below resistance. Kiwi for me has been a non-starter, but I do think it's shaping up to be a decent breakout if we do get this opening range sort of clearing in the days ahead. Okay, last two real quick, and then I got you. I haven't forgotten about oil, Rohan. Really quick, I want to look at Aussie. Another one where the opening range for the week is preserved. It looked like a false break of the opening range yesterday. We recovered back above. Here's just another false break of the opening range highs. Look for the break here. Aussie on the weekly charts is basically sitting at major downtrend support. We've been here for 4 weeks. No surprise if we do see a little bit of a rebound. Again, that would deal really well with the dollar pullback near term. So when you get back into the Aussie near scope, you can see, man, this is big downtrend support. 73.60 is going to be the level you need to break to alleviate that downside bias. So even if the weekly opening range breaks higher, sure, 73.28, 73.60, decent targets, but this has to hold if Aussie is moving lower. Okay. Last but not least, so I can wrap it up here real quick, is oil. Here's the oil chart, Rohan. This is, oh man, it already moved. Damn it, this was massive. Guys, I've been following oil with you on the intraday charts all week long, okay? This was a big, big move. We talked about the weekly chart. This needs to close above 77.37 for the breakout to remain viable. 1, 2, 3, 4, 5, 6, 7 weeks up. We looked at this before. It's actually not that radical. You have seen 7-week spurts in crude oil before. Now, they typically give you a decent pullback. Not always. Here's one where the, where was it? Right here, where we did 6 days up, and then we simply got a 1-day interruption and then a slow grind higher. Of course, this is a different sort of time span from where we're in, but you could see that similar scenario. We've had a massive rip, okay, and you start to taper off here a little bit. So I'm watching this week's close. If it closes below 77.37, the risk remains for a pullback. This is huge, huge, huge inflection range. Here's what it looks like on the daily chart. So again, we gave you a warning on, well, watch out, because we're at uptrend resistance. Here's slope support off the March, April lows, caught support right there. A parallel extending off the July high gave us resistance right there. Stop traffic, we even added near-term slope. Here's a channel, uptrend resistance was there. And yesterday in the update, I warned you guys that an outside day reversal basically may have called the near-term high. And I think that's what we got. Now the drop found support right where you'd expect it. Here's the monthly open, and here's that huge pivot that we talked about for so long at 74.26, 74.90. And here's the initial reaction. Now, I wanted to highlight also that you see those dots? That's the monthly open there as well. Critical support for crude. As you guys know, I've been saying it for a while. I am wildly crazy energy prices, both from a technical standpoint on longer term charts and from the just administration, the geopolitical standpoint of where we are with production and all this stuff. So I'm bullish crude, always have been since the start of the year, and we're basically looking for pullbacks to buy. The question is, was that a pullback to buy? It's too early to tell. it was too shallow. I would have liked a little bit more back and forth to complete the correction. You know, it's very rare that you just see a slide here and then a continuation. It can happen, but I would like to see another drive into this area, if not a test of support. At the end of the day, if we break above the near-term high day close, or excuse me, near high close, which is like 78.90, that's a breakout. Okay, so if you close above this, okay, you're starting to get in trouble if you break above this. We're not in trouble. I mean, the bears are in trouble. You start to risk resumption. My whole thing with this is that this is an absolutely paramount level. You have so much lined up here already. Uptrend resistance. That's all to say, if it breaks, you should see another accelerated run. And 82, 84 would be like a day or two. But that's all contingent on this breaking resistance. Like I said, you're at confluence uptrend resistance. I would expect to see some more sideways action, if not lower, in the next couple of days. But at the end of the day, if you buckle above 79, you got another $3 to go on the long side. Okay. Any other questions or trade setups you'd like to review? Throw them on the message board now. Otherwise, we'll go ahead and wrap things up. Non-farm payrolls are on tap in addition to CAD employment tomorrow. So you get that double whammy. Employment from Canada is expected to show a gain of 65,000. Unemployment there is actually expected to drop 2 percentage points, or 0.2 percentage points rather, to 6.9% from 7.1. But the simultaneously release of non-farm payrolls and Canadian employment data can oftentimes make a significant move in dollar CAD. So we'll be watching this one specifically for a breakout of the weekly opening range as we head into tomorrow. Remember, the dollar has been rallying. We're near resistance. The base case scenario of dollar rallies tomorrow might be a favorable event on the short side. So guys, we'll go ahead and wrap it up there. Thanks to you, Jay, Rohan, Steve, everyone in the room. I love seeing you guys every morning. Have a great weekend. Best of luck trading tomorrow. I'll see you next week on Monday for the Daily FX free session, and then back on Tuesday right here on SB. Have a great weekend, guys. Cheers.